All right, good afternoon, everybody. Should be up and running. Today is Tuesday, May 2nd. I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer, and member of FINRA. All trades placed by me are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you and not of your own financial condition. Position disclosure here is the exact same as it was yesterday, so there's nothing update, nothing too good in there. Let's talk about it. If the VTF is blurry, which looks like it might be, feel free to go over to the YouTube, which should be good. Yeah, bloodbath today, and it felt worse than the percentages that we closed at. I guess we grinded up a little bit in the afternoon session. But SPY's here down 0.11%, Q's down 0.9%, relative strength there, and this Russell's really not good. IWM down 2% is a big problem. Let's take a look at it. So we had a sell-off event today. I sure didn't guess it. As a matter of fact, I may have said, I'm trying to remember if it was yesterday or today that I said it, but I think it was yesterday morning. I think that the same probabilities would have applied here. Match misses on revenue. It's getting smoked. They're just destroying companies right now that are missing on anything. Why can't I get a chart to come up? There it is. Your match getting hit. Your $1 billion buyback. So see if it goes back up on that though. Anyway, yeah, so I think it was actually yesterday morning that I went through probabilities pre-market, which is something I like to do. I think it's a great exercise. Yesterday morning I said highest probability is consolidation, second highest probability, definitely to a lesser degree, would be upside continuation, and lowest probability would be a big sell-off. I don't think I said that this morning, but I would have said the exact same thing. I would have said, especially after yesterday's rest, that we're still a little bit extended. Fed is tomorrow. I definitely felt that the highest probability was sideways chop today. That was really my expectation. Going into a further upside grind, because it's been the general direction of the trend, wouldn't have surprised me either, though I did have some concern with the push-through failure of IWM 176 yesterday. Thought that was a little bit of a warning signal, but I just thought it would mean further chop. And I would have said that the lowest probability situation today would be a major sell-off. Well, I couldn't have been more wrong. The market got absolutely smoked. For whatever reason, the market today decided to care about regional banks again. I thought that if we were going to get a secondary sell-off on the regional banks after FRC, that it would have been yesterday, and it really wasn't. We looked at the KRE this morning. KRE lost $42 yesterday, which we discussed is definitely not a good thing. If you're trying to be bullish on the market, you're trying to be bullish on the IWM, you want these regional banks to stabilize, you want to see the $42 support level hold. We lost it back on April 25th, but we regained it a couple of trading sessions ago, just to lose it again yesterday. And then today was just an absolute bloodbath that was really led by these regional banks. And I don't think that there's anything new necessarily to point to here. It's just that the market decided that we can take some of these things to the woodshed. I'm having like atrociously slow internet right now for some reason. I did not have this all day today. There it is. Very delayed quote. I'm going to type up that WAL. But WAL, Western Alliance Bancorp, down 16%. This PACW, down 26%, 25.5% at the end of the day today. PACW smoked. I guess there was that headline that came out from someone that said that there's maybe another 12 regionals that have similar asset profiles to SVB and FRC. And I still think that one of the issues we're dealing with right now is the way that SVB and FRC got bought out. The fact that they made shareholders zero, it kind of blows my mind. I think that there's something wrong with the way that the FDIC is doing it. And don't get me wrong, I think that the FDIC is an excellent institution. It's really important that it's there. But I just can't help but wonder if when these banks are looking at buying another bank, and you do your research and you look at FRC as a bank, or you look at even SVB as a bank, and you say to yourself, wow, I could buy this bank and it'd be really accretive to my bank, to my business, or because I've got the appropriate amount of cash to be able to deal with any short-term liquidity crunches that they are dealing with because of some of the duration on some of their assets. I've got enough liquidity to be able to handle that duration. But if I just wait for the FDIC to really make it a zero, then I can come in and get it for pennies on the dollar. And when you think about that, and what Chris just said, that they made bondholders a zero too, when you think about that, and I still go back to that First Citizen Bank, if someone can remind me, that 5-letter symbol that went up 50% when they were able to buy most of SVB's assets, or more recently, JP Morgan. Exactly, Chris. JP Morgan, which I'm just getting the slowest quotes ever right now, and I have no idea why. JP Morgan had that big gap up yesterday. For all intents and purposes, JP Morgan bought the entire bank. The deal with FRC on some of their corporate debt or whatever. Okay, well, that just sweetens it even further. There it is, my super slow quotes. And obviously JP Morgan got hit today, everything got hit today, but all JP Morgan did was fill the gap from the gap up yesterday that came as a result of buying FRC. So the question that I pose, which sounds like some of you guys here in the chat are echoing that sentiment, is who in their right mind is going to own equity to any regional bank right now if this is the game? If you could, and believe me, I'm no major fundamental analyst, but I felt very confident with SVB, which was the first one that went. I did a ton of research on it. I felt extremely confident that if one of the big banks came in and bought SVB at $50 a share, that it would have been super accretive to them. All they need to do is to be able to have things in place to handle the short-term liquidity crunch of holding 3-year treasuries. I mean, come on. The safest assets in the world it's just duration issues that these banks are dealing with. But if you're going to let all of them go to zero, if you're going to make the shareholders zero, if you're going to make, and I didn't think that was going to happen with FRC, it did. I think a $3 a share buyout or something like that would actually come from FRC, that would make sense. SVB made more sense that they made it a zero because of politics, honestly, more than anything else. The government doesn't want to be viewed as bailing out a bank or anything like that. It begs the question: who in their right mind is going to own any of these things? You could do your fundamental analysis on this PACW, which I have not done, and you could come up with fundamentals, and you could say, hey, if this company just has enough short-term liquidity to be able to get through a short-term liquidity crunch, this thing is worth, I don't know, $15 a share, $10 a share, $6 a share, whatever it's worth. But no one's going to buy it, because if you have, and it sounds like this is actually what's happening, if you have hedge funds rating these things to the short side, it becomes a self-fulfilling prophecy, where if you see the stock going down 20%, it leads to the stock going down an additional 20%. And it's just no good. These banks should be able to be totally sound. They just got through their earnings reports. The earnings reports looked relatively fine. But if they continue to raid them lower, and then people who have assets at those banks see that the stock just went down 75%, then they're going to go take their assets out, and then you end up having a self-fulfilling prophecy where you could see 12 more of these banks go to zero. And it's the same thing as a shareholder. Who's going to want to come in on the opposite side of this trade right now if they're just making these things zeros? So I don't really know what the solution is. Seeing Francisco's comment here to the corner of my eye. Big banks learn from politics after JP Morgan got sued for legacy WAMU and Bear Stearns MBS book, even after doing the world a solid. Yeah, so I don't know 100% what the right idea is, if it's kind of doing it hand in hand with the government. The big banks are basically government agencies anyway at this point. They're totally fully backed by the government. It's one thing if we let FRC go under, but we'll never let JP Morgan go under. So, Brant Hirsch saying, bankruptcy court gives the equity holders a chance to state their case. With this FDIC nonsense, it's like they just seized the bank with no due process. Yeah, that's a great comment. And again, it goes back to exactly what I'm seeing. And it's just extremely concerning because you saw what KRE did to the market today. This KRE sell-off brought down the entire rest of the market. It's destabilizing the system right now. So I'm certainly nervous about it. We were able to have big tech earnings last week come out and kind of save the market, and these regional banks that reported earnings all seemed like they were more or less fine, with the exception of FRC's report. Everybody reported, and again, was able to be totally fine. But now you have this PACW down 27% today that have short-term liquidity issues. If you are, I don't know anything about PacWest Bank's business at all, but if you're a depositor there, especially if you got more than $250,000, the FDIC limit, or you are a financial advisor there, we had discussed that situation with financial advisors. First thing to go at FRC was those big financial advisors that made up like 15% of their revenue, because the reputation of FRC just kind of became like a bad word. These businesses are all fine, they just have marketing problems, is really the way that I kind of view it. But it's potentially getting to the point where it could start to destabilize the system a little bit further, and it's becoming really scary. I didn't see this coming today at all. I was caught totally flat-footed. I'm down a good amount of P&L today. It is what it is. It's part of the business. And I definitely failed to adjust as well. It took me too long to realize what was actually kind of causing this opening sell-off in the market. What I did realize right away, if my charts want to work for me, when I was looking at the Qs in the beginning of the day, and even the SPYs, the Qs for the first almost half hour here were going sideways, were holding in fine. They were just looking just fine like they always are. The SPYs here kind of had this like bearish consolidation, but we're mainly holding in and going sideways. And the IWM was getting smoked from the beginning and created a descending channel and created downside continuation on it. And I remember commenting at around 10 a.m. right before the breakdown saying, oh man, one of two things has to happen here. Either this IWM's got to bounce back, which is what we have actually typically seen recently, or these Qs are going to end up eventually getting hit. And they eventually got hit hard, and that's when the SPYs finally took it lower. I can't remember the last time I've looked at a SPY 5-minute chart, and I've looked at the first 2 hours and seen one green 5-minute bar. Like, I feel like even during COVID, when we were going limit down, you would have insane volatility, but you were getting like a green 5-minute bar coming in that volatility. This sell-off in the beginning of the day was absolutely and utterly ruthless. You could have caught it if you were prepared for it and you're ready to hit that short button around 10 a.m. I just came in with too much of a thesis of, the market here is probably going to consolidate today. We have the Fed tomorrow. We didn't crash yesterday on regional banks, which is when the FRC news was really out. I got caught totally flat-footed on this. I was too aggressive too early on a couple things. I was trying to look for signals for oversold bounces in these SPYs. And then finally I realized at about 10:30, after a couple failures on buying stuff, that this sell-off is different. We have these typical extension rules and time frame rules that work very consistently, but there are no such things as 100% in trading. And just seeing your comment, Varun, yeah. There's no such things as 100% in trading. It's very, very rare. 10:30, you look at this 10:25 a.m. SPY candle, that you're going to get a doji on volume that's been consistently high with this degree of extension on a 5-minute chart, let alone a 15-minute chart. The 15 is very extended for 10:30, and that's when the 15 becomes most important, that you don't get a bounce, that you don't get that oversold bounce that we look for from a bounce back, scalping, snapback trade kind of perspective. And honestly, on the short side, I don't really see any setups here on the short side. You know, there's always someone after a big sell-off day like this who's like, well, we should have shorted. And said, okay, great. I see the execution at 10 a.m. I guess you could have gone with the momentum inside 5 and down at 10:20 for a short. I don't like that trade at this time of the day. I don't like momentum continuation trades on the index at 10:20 a.m. I think that's a pretty low probability situation of getting downside continuation. But what made today different, and when I finally realized it way too late at probably 10:30, and I started talking about it, was that this sell-off is different. This is not your typical technical, sell-off here where at a certain point we can look for that signal for the oversold bounce to come in. This is an event-driven momentum sell-off where market participants are going risk-off in a market environment that's arguably expensive to begin with. I mean, that's certainly what the sell-side analysts like Mike Wilson have been saying, which, for me, saying it doesn't matter. Is AMD getting hit? I've been saying it doesn't matter what Mike Wilson says. We should pay attention to his thesis. The guy's a smart guy. But the market technicals and everything else are just... but again, this was an event-driven sell-off. It was led by fear in the regional banks. That fear in the regional banks spread out. Everyone... it's really interesting right now if you look at positioning and sentiment in combination with the market being air quotes expensive, because sentiment is still like very bearish, but positioning's not. Positioning's not as bearish as you want it to be for upside continuation. As a matter of fact, we saw Goldman come out last week, or maybe it was even the week before that at this point, with their tactical sell conditions that was entirely based on positioning. So the way that I justify that is everyone is bearish, but everyone's staying involved in the market because the market hasn't broken down, and no one wants to be the person who is wrong and doesn't have exposure on their books if this market actually begins to work its way higher. But that also means that if there's a de-risking event that comes out as a result of, let's say, these regional banks, that sell-off and that momentum can get very vicious. And the thing about this sell-off today also was that even though it was really fast, it was also very orderly, which is concerning. When you really want to come in on the other side of the market, you don't want orderly. You want, extreme extension, extreme volume. And while we stayed very consistently extended to the downside on our, 5 and 15-minute time frames, I don't have any statistics on it, but I would assume that this is like a real outlier case of the SPYs. I guess the SPYs maybe briefly touched the ADMA at 10 a.m., but I want to know historically, just out of curiosity, and I don't really need to know, what percentage of the time will you have the market be so weak that it can't even touch the ADMA on the 5-minute until 11:35? That happens with stocks on news fairly regularly. You can find that in stocks all the time. But for an index, that's like very, very rare. So again, it just kind of shows you that this was more of an event-based de-risking sell-off than anything else. I noticed it too late, and I was caught flat-footed, and took a hit on my P&L as a result of it, which just is what it is. Just is what it is. And then that upside grind in the afternoon was interesting also. Some of you guys' comments were interesting about how, I keep saying interesting, about how vicious the sell-off was, and then almost how vicious that upside grind was. If you were still trying to hammer shorts after we did bottom out here at 11:30 into this upside grind, it was very hard, and then eventually we got actually extended to the upside at 1:50 p.m. So super interesting day. I think that these earnings reports are still really, really important. I'm not seeing any good reactions here after hours right now. We have AMD selling off. As I saw, Ford was getting hit a little bit. I don't know, without it taking a minute to come up. It's so bizarre. There it is. Ford's kind of flattish from where it closed. Now I guess it's down a little small. Just not a great environment. As far as the ideas and the game plan for today, again, obviously I was wrong. I think we had a great list today. If we could have had any degree of market support, though, which we just didn't have. We had Uber on the list today for continuation, looking for long versus 34 or 35. Was not a big focus of mine today, but if anybody was able to be involved in this, you know, I love these long early consolidations where the ADMA catches up and then you get continuation. That one was solid. I was really looking at that ZS and CrowdStrike on those buy initiations for those RDRs, and it was tricky. The ZS gave a great initial boost, got hit back down, and then was looking pretty good to me again here. And I think I even also called out this potential double bottom, which held. So ZS was okay. With some market support, this trade could have been excellent, but you know, zero market support on that. CrowdStrike, I didn't look at as much as ZS. ZS became a little bit more of a focus. You would trade either of them. Just can't get charts here. Yeah, CrowdStrike was much more difficult. Much more difficult. So, yeah, that's pretty much it. It's pretty much all I got. You know, I tried to buy a few things on the way down. I tried to be involved in that SoFi versus 6. I bought like 613 at one point, and then when I got stopped out, I tried it back through. Not 5, not 6. I mean 5. I bought 513 on the way. 5 is a big support level, and I feel like the selling's overdone. And then it stopped me out, and then it came back through 5 at one point, which you can't even see on the chart, which I bought all in the beginning of the day, and that one didn't work out either. Obviously, you know, being involved in any bank today, you know, even the SoFi, which, you know, we kind of discussed my opinion on it, impossible to buy like any bank today. I mean, these things were just wrecked. It's honestly impossible to buy almost anything that was correlated to the market, and unless you figure out what Brandt is short. And if you figure out what Brandt is short, you can feel really confident that he has the one stock in the market that will go up. So just see that Brandt is short Amazon and go long, and you'll be just fine. Amazon, like almost my only green name today. Yeah, I guess Brandt stepped away, or otherwise I'd be getting comments from him. All right, gang, that's all I got. I am happy to take a look at whatever you guys have, any questions that you guys have. Take a look at these AMD numbers real quick. Takes 5 minutes for my charts to come up. This is so bizarre. AMD CapEx Q1 came in high. Revenue looks like it beat. Adjusted EPS looks like it beat. Operational margin looks like a beat. Guidance, Q2 revenue to be about 5.3 billion, plus or minus 300 million. So it looks like, you know, that range is within the estimates, but a little bit on the low end. AMD's seeing, you know, 5 billion to 5.6 billion, and the estimate's 5.51 billion. It's a little bit light there. You know, EPS is a B, revenue is a B, guidance is a light. It's interesting that they are really hitting down companies that aren't providing like terrible guidance. I feel like we've seen that a few times in some of these stocks. AMD Q1 R&D expenses a little bit high. I don't think that matters that much. This is important. AMD sees second quarter adjusted gross margin at 50% when the estimate's 50.4%. All right, so another little miss there. All right, so AMD trading down a little bit here after hours. It's not a complete disaster though. Was it 88's that important daily level that I've talked about? Yeah, 88 bucks is an important daily level. We closed above it. AMD on the intraday today, I'm just looking at it, was just fine. It looks like I think it closed green today. Anything that closed green today is extremely impressive. From Varun, can you talk about Chegg and getting out today? I get trapped after hours. I just want to keep averaging down, and before you know it, I'm down a 5-digit loss. You got to have a game plan in place for your risk. It's first and foremost. I lost money in Chegg after hours yesterday, and I lost more money in Chegg today. You know, Chegg was kind of that classic, you know, gap down and then wait that comes from the moving averages when the moving averages catch up. What I really wanted to see from Chegg was a very early, strong bounce. I got it in the first 5 minutes, raced it. So that was no good. 975 was a really important area after hours. And I bought it off the open. High of the day there is, high of the open's 985. I was selling stock into, broke that opening low, but it's still super extended, so I'm sticking with the trade as much as I can. I took a really big trade back through $9 here. That was my biggest trade on the day. So I called it out. It put in a low of $8.93 and wasn't looking right, but that extension here. So I bought it real heavy back through 9, real heavy and tight, and that worked great. I got a bounce back all the way almost to that 975 resistance that was pre-market resistance that I was really looking at. I liquidated everything that I bought on my $9 trade into that move. So at that point it was my best name. It was my best name on the day, which isn't saying much because I've got all long swings on and the market was getting annihilated. But at that point, it was my best name, and I took all that risk off, and then it just did nothing, and I stopped trading it. I had maintained a core position that I was looking for more from it. I thought a move to 11 or even 1150 today would actually be really reasonable, but it could never break that 975, and then time is against you on these trades. You really need that market to make that big price correction early, and then you can use that to look for like a higher low to be able to come in to see if this thing can reverse higher. That's going to be lower probability. But my thought process, I mentioned in the morning meeting, I said that this name was going to be very dangerous to trade, but I wanted to be involved in it because I thought that a 50% sell-off on that earnings report was very overdone. I still think that. I still want to have it on my... Is Chegg at 965 after hours right now? Because that kills me. Ugh, it sucks. I liquidated my position in the close. I wanted to be able to even rebuy it tomorrow. That's a big P&L difference for me. Brutal, but whatever. Whatever. Part course for my trading today. Just noticed that big move higher. Anyway, I took a pretty close look at this report and what they said. The report from Q1 was actually just fine. They pretty much beat across the board right now. That, the CEO talking about how AI is taking away their business, and if they have less users because students are going to Chat GPT instead of going to Chegg. The market did not like those comments and they destroyed this thing. So I think that the stock is worth more than where it's trading. That's a fundamental thought process. You still have to have a technical game plan in case you're wrong. So I was very aggressive with this. Though I didn't buy it back after that bounce, I kept that core position I had the entire day. And then at the end of the day, I looked at this thing and I really didn't want to sell it. To be honest, I really didn't want to sell it. I wanted to keep it. I just didn't have a profit cushion. At this price, at $9, I was back to being down on the name because I was trading at pre-market and stuff. So I was back to being down on the name, and I couldn't keep it. So I liquidated the position in the close with the plan of, if I get a down open tomorrow in the name, that I probably would take my stock back, or even a flat open, I probably would take my stock back, but not an up open. And now, the stock is up 60 cents from where I liquidated a pretty big core position, which would have made a huge P&L difference, actually. So I'm getting frustrated looking at it. But I followed my game plan. It is what it is. I have to manage my risk, and it just wasn't appropriate for me to keep this position overnight. But it was finally doing into the close what I needed it to do. Because what ends up happening in these things, with these big gap downs, is you get this degree very regularly of like algorithmic selling that comes in on those moving averages, which is why, by the way, I love that trade of, which is usually what I'm looking for. When you get the really big gap down, you get the bounce back, and it creates the doji candlestick into the ADMA. That's like a really good spot to put the short on, or if the same situation happens in reverse, to put the long on. I love that. But I never got that bounce. And then eventually when that ADMA caught up, you can even it weighs on like a ton of bricks. And eventually it starts to negate that. But as soon as that happens, the ADMA on the 15 catches up, which is basically equivalent to the 21 on the 5. And then you get that second level of weight. And it was only in the last 10 minutes of the day, as I was looking to liquidate my position, I was watching it really closely because I wanted to obviously liquidate my position at the best price possible. I'm like, look at this. It's finally getting above the moving averages. it's finally clearing above the weight of those moving averages. That can enable this thing to actually clear up. So I waited till the last second, and I got 907 as my like liquidation price into the close. So I thought it was actually a pretty decent price considering it traded beneath that, for hours beforehand. But then, of course, that's why it's probably continuing to trade up after hours. They finally were able to clear, through that barrier of sellers. But, yeah, I mean, look, I went after it after hours yesterday, too early, liquidated my position for a loss because I was too early, and it was clear to me that I was too early. And then that was at $12 I liquidated my position after hours yesterday. And then today, I went right back after it. Kind of starting pretty early pre-market. I traded the heck out of it in the beginning of the day, and then once I wasn't getting the bounce I was looking for and that EMA was catching up, I just stopped and held onto the core position, and it just is what it is. So I just took a loss yesterday and an additional loss today. So not great, not a good day for me today at all. So I hope that helps. Next from Tate, general game plan post 1:30 tomorrow. Self included are looking for the Fed to indicate that they are done hiking after May in some form or another. So we need to see what that language looks like. As a general rule, Fed days are tricky to trade. You get your normal opening action the first hour of the day, the normal price discovery, as we satisfy however the market gaps, so you can trade that as normal. But typically from 11 to 2, 10:30 to 2, you really don't want to trade. Very typically. Maybe tomorrow is different because of what today was like, but most of the time between 10:30, 11, and 2, you don't really want to be trading. The market's choppy. No one wants to put new bets on right before the Fed decision is actually going to occur. Anyone who's going to do that probably has already done it. So there's generally no advantage trading midday. Trade the open. Save yourself some bullets if the open's not great for you. Be patient. 2 o'clock comes out. That'll be the Fed decision. 2:30 is presumably when the press conference starts. What we've seen in recent Fed days for a while now is that everything that happens at 2 o'clock is already expected by the market. They're going to increase by 25 basis points. You get a little bit of language from the Fed, and you get a lot of volatility. Usually we have real follow-through direction between 2 and 2:30. Just a lot of volatility. So pay attention to it. And the first thing that I always want to pay attention to whenever we have these news events is where the market is starting from. So we'll be I'll be making sure to mark. I'll try to be on the radio at 2 o'clock tomorrow. I'll make sure to mark like, okay, this is our SPY starting point here at 2 o'clock. Generally, as a general rule, while we're trading above that point, you're better off being long than short. While we're trading below that point, you're better off being short than long. And kind of take it from there. Yes, I know that the first move and sometimes the second move on the Fed announcement is very regularly the not real move. But the way to just keep it simple, stupid. You're trading above the starting point, you're better off being long than short. If it comes back below, if you get a great initial move higher in the first 8 minutes from 2 to 208, and then it comes down and that opening low breaks, everyone that just bought in the first 8 minutes is trapped. So then you see some downside follow through as all those people have to liquidate their positions. So now it's below, and you can potentially look for the short. To our extension rules during that as well. But there's a good chance that you get a lot of volatility in no direction between 2 and 2:30, and then when we've been seeing direction actually come, when it does come, it doesn't always come, has been from the press conference. So press conference starts at 2:30. We'll see what Powell has to say. We'll see if there is, a 25 basis point hike, but what language he uses to potentially indicate that they're done raising rates. I'm sure there's going to be a lot of language around, continuing to watch the numbers and all that stuff. That ongoing rates are a possibility, but they'll use some sort of language to indicate that while ongoing rates are a possibility, it's not necessarily the expectation. And then from that and from what he says, it can create more of a directional move. Tomorrow's going to be a really interesting one because my initial thought process is that the Fed no longer hiking is bullish. I think that there's a bunch of statistics I read also that look at market performance after the Fed stops hiking that are also generally bullish. But it just seems so anticipated. It seems so anticipated that I'm a little bit nervous about it. So we'll see what language he says, and we'll take the price action as it comes. From Denver, Steve, remember that capitulation we thought was not coming? Maybe we should reconsider. Yeah, I mean that's big picture daily chart capitulation that people were looking for, which maybe you could even make an argument this big volume day on, which is also a Fed day at the October low, that there was a degree of capitulation there. But for the most part, there really wasn't. But the scary part is, though, that Steve, if you're right, where does that happen? It probably happens at like SPY 300. So I think we're a very far away from like a bear market capitulation event at this point. We need to resume the bear market first. We haven't even resumed. Bad as today looks for the SPYs, if you're going based on the S&P, which in a lot of ways is the most important index. I've made a lot of arguments that the IWM is. But if you're going based on the S&P, as nasty as today's daily candle is, for the most part, this chart's still looking fine, and it's still in a short-term uptrend. So we'll see. We'll see what Apple earnings do as well to this market on Thursday. Anthony is heading to Jamaica for his wedding and honeymoon. Awesome. Congratulations. Congratulations, and thanks for the kind words. Have fun. Enjoy it. Don't look at the market. Don't be like me. I was probably, I don't recall this specifically, but I wouldn't be surprised if I traded on my wedding day. Don't be like me. Chegg's having an interview. Wish I knew that was happening. They couldn't say anything else to make the stock go down at this point. From Nick P. If he is smart, he will be super ambiguous or so ambiguous. Don't see him saying pause is anywhere close, but we shall see. FFI now. Yep. He has to talk about the regional banks. I mean, at a certain point, you just got to get up there and just be like, the regional banks are fine as long as you don't all get scared and run for the hills. I mean, that's basically what it comes down to, is confidence. But there's no confidence right now, and part of the reason to understand why. You need, I don't know, some great unifying force which no longer exists in politics in our day and age that can do your patriotic duty and stick with these banks. What you needed was the venture capital people to come out and say, when SVB was happening, that everybody needs to stay calm. It's still the venture capital folks that caused all this. Thanks, Brett. I'll take a look at that. Looks like I got through things on the VTF. See if there's anything on YouTube. I'm trying to open the... I don't know why my internet's not working. Sounds like you guys hear me fine though. I can't even get the YouTube link to open up. No idea what's going on. I probably need to restart my computer. It's fine all day today. Alright, well, if anybody made a question on the YouTube, if somebody's in the VTF and can copy paste in the VTF, it's appreciated. I can't get it to come up. Otherwise, I'm just going to wrap things up for the day. Going once. Going twice. Oh, there we go. Thanks, Shane. YouTube's working great from Robert and Chris. I got an Uber. I got an Uber at the 9:40 a.m. candle. Okay, I have the inside 5 and up there for momentum. I don't hate it. We're just not moving until 10:35. Came within 5 cents your stop. All right, well, I'm glad it worked out. I like your trade. Your trade here is a pure momentum trade, which is fine. If you're going to do it in an extended stock, this is the way to execute it. Inside 5 and up in a company that reported, great profit guidance on their earnings report. It is very typical, though, also when you get these larger gap ups, that you need a lot of time to heal and consolidate that gap up. And I remember specifically talking about that. I'm not sure if I can get the chart up anymore. I remember specifically talking about that with both Meta and with Microsoft's gap ups on their earnings reports that were huge. I remember the morning meeting that day being like, we might need, to give of sideways consolidation, and then eventually the ADMA can catch up and maybe some price action can continue. Yeah, here's the Microsoft gap up. You can see this. Took a full hour till almost 10:30. Finally, that ADMA caught up and it was able to go. Meta, I believe, is very similar. If I can get that chart to come up. And then Uber, again, did the same thing. Yeah, Meta, huge gap up, an hour of consolidate. This actually did more. It just needed the whole 15-minute to catch up, and then it tried to give a little upside continuation at like 12, and that wasn't that great. So, I like your trade because you're going after the momentum, trade for earnings continuation, and I think that's just fine. But you also want to be conscious that sometimes the market just needs to digest these gaps, so that's fine. What are your thoughts on a U.S. debt downgrade and its effect on the market? I don't have any thoughts because I don't think it's going to happen. I just don't think it's going to happen. I've seen this happen multiple times over the course of my career with these stupid politicians that we've decided to elect for whatever reason. And, my favorite thing to look at is incentives whenever you're looking at anybody. Whether you're looking at sell-side analysts, or you're looking at hedge fund managers, or you're looking at politicians. You have to understand what the incentives are of the politicians. They're going to play all these nonsense games, which are very dangerous to play those games. But at a certain point, they get the deal done. Because if they don't, every single one of them gets fired. And we should probably fire every single one of them anyway to begin with, in my opinion. But I don't have any thoughts on a U.S. debt downgrade or the debt ceiling not getting raised and all that happening, because I've seen this happen on several occasions in the past, and they always end up getting a last. And they've still got a couple weeks to do it, which does not seem like a lot of time because it seems like they're very far away. But I think it's still enough time. So I honestly haven't given any thought to it besides that. From Chris K, I was so close to getting out of Uber. I just didn't care what the market was doing, so I stayed in, and it paid off. Well, buy the ticket, take the ride. That's what I always talk about. You had a game plan in place. Uber was like trade of the day today. It was on my list for today as well. And, if you put your risk on, you might as well follow through with the risk on the trade. It's, in my opinion, always the way to do it. YouTube went down. Great. We're looking for bounces in this sell-off. Or is it this market, I don't even think gave any opportunity to short. Unless you really took that 10 a.m. short. I think that was very doable. Or you did this momentum inside 5 and down at 10:20, which I don't love that trade. It's not my type of trade. There was no opportunity, there was no appropriate setup to actually short this sell-off, except for 10 a.m. So I think it was very hard. Especially hard because I wasn't expecting it. I wasn't flexible enough. All right, I'm going to wrap things up there. Have a great night, everybody.